Well, hello, Maverick traders. Welcome out to your market roundup for April 18th, 2022. Corey here with you. As always, a quick reminder to make sure you follow your trading plan. So, I've had the thesis of late that we're in a sideways market, and there's really nothing that changes my mind on that front. You look at it and it's a mixed picture. You kind of had the 20 above the 50, but market crossing below, so they kind of offset. You look at the price action and you say, well, are we trending upward? Well, not really. I mean, we made a higher high, but now we can't even hold at support levels, so that's not bullish. Are we making lower lows? No, we're above those as well. So, I think, and this is kind of what I've been drawing out, is we're in this type of phase where, yeah, you're going to have some moves down and up and down and up, but relatively sideways overall. The Nasdaq looks the same. There's not too much happening. Very quiet day across markets. Interestingly enough, the percentage of stocks above or below the 50-day moving average is the exact same as last week. So last week we had 64% below, 36% above. Well, it's the exact same number this week. Advancers versus decliners, a little bit more selling pressure than buying pressure today, certainly, and the market's kind of reflected that with a little bit choppy market environment where the Russell was down, for example. The S&P, Dow, and Nasdaq up very slightly, but not much. Are we at peak inflation? Peak inflation in terms of you have to peak at some point to head back down, and we're probably near peak at 8.5% or thereabouts. But having said that, we're also in a situation where that inflation, even as it comes down to 7 or 6 or 5, is still too high according to the Fed's mandate and goal of having about 2% inflation. So I think we're probably pretty dang close to peak inflation. This is probably gonna back off, but it's still a problem for the Fed. And the Fed has to battle it. You look at their mandates, they have mandates to keep full employment. Employment picture is good. They want to have price stability. Well, that's the problem. Markets are choppy, digesting the news, all of that bad news for the most part is out there. And until we get a catalyst and really some sort of game-changing dynamic, an unknown or something that really fuels the next wave, we're just in a holding pattern, in my opinion. So let's take a little closer look at things. As we look at the S&P, I would draw your trend line off of these lows and just let it kind of tell you when we get to that lower end is where we'll probably kind of flush out to the downside and see a bounce. I would draw your trend line down across that peak to that peak and so on, and a push back up towards there is where you're likely to fail. And that's still a plenty of volatility, as you think about that trading range. But fast forward a month or so, and you're probably right around those levels. The Nasdaq, a little bit weaker market. The reason that the markets had more decliners than advancers, the Russell 2000 small cap stocks, which make up more of the majority, were actually down on the day. This was a little bit of a flip-flop where they had been outperforming as a market. They were down today, while some of these other markets were slightly higher by just a very small margin. But again, looking at the Nasdaq, I think you're probably getting towards the lower end of the range, and it's just going to be a bumpy ride. It's just going to be a little choppy here, and probably closer to a short-term bottom, just in terms of being a little closer to those trend lines down there. You had energy up on the day, energy equities. You saw some of these money center banks, like Bank of America was up 3% on its earnings this morning. And banks have reported they haven't really done all that well to this point until now. They haven't really been selling off dramatically on earnings, but they were selling off hard into earnings. And so far, it's a small sample size, but so far stocks are moving less than what options are pricing in, which is a sideways market, right? In the first quarter, when companies reported in January, holy smokes, we saw crazy wild moves. And that's what happens in a stronger market environment. You saw Facebook down 20 and Amazon down 20 and Google down, stocks all over the place. You saw DocuSign down like 45% on its earnings. I mean, just wild moves. We're in a sideways market. Guess what's happening? Earnings are somewhat of a dud. Now, granted, when you have this many companies, there's going to be somebody that has a big blow up somewhere, but we're in a sideways market and the majority of stocks are underperforming what is priced into those options. So my opinion, we're just, if you make me say one or the other, do we think, more down than up? Yeah, probably, a little more bearish than bullish, but I'm just not really anything right here. A little bit more bearish than bullish. I could go for that, but I'm going to call it zeros until we get a little bit clearer picture or some sort of catalyst again. And when that news hits, you'll probably see it in the price action. You should see a big break, bullish, bearish, whatever it is. It could be the Fed raising rates by 50 basis points and the market breaks higher. It could be something that is a turning point for the markets technically that's a little bit out of what you would have expected. That's not out of the question at all. But ultimately, we're in kind of this sideways market environment and waiting for some sort of break in one direction or the other that holds some significance, has some sort of catalyst behind it. Now let's take a look at a few different names. I've got some of the same ideas on a couple of these lists and some that have changed up a bit as some new ideas are trickling in. So here is a REIT, a real estate investment trust. And the way I see it, we're kind of at the lower end of the range. You see today they kind of, had a little bit of a wave down and a wave up, but I think we're still essentially at the low end of the range and looks a lot healthier than most things out there. Now, this is the sector, but you're not even below the 20 yet, let alone the 50. I could see this maybe fill this gap, but ultimately I think IYR is going to go to a new high. I think this is outperforming for a reason, and frankly, it's simple as demand is overwhelming supply in this sector, and it looks like it should continue to work its way higher. Now, some people might say, well, how can REITs do well in a rising rate environment, yada, yada, yada. Well, a lot of that was priced in down here. So we already know that rates are higher, that the Fed's going to raise rates, that this and that. And ultimately, for a lot of these REITs, it's actually a good thing. Rents are going up and they're rent collectors. So it's not, are there some REITs that might be hurt by higher interest rates? Maybe, but there's a lot of them that are going to be a beneficiary of this. So I think fundamentally it kind of makes sense they're holding up, but technically at the lower end of the range, I like REITs to the upside, IYR. Verizon. Here you are in a little bit of a pullback. Now it's choppy, it's sideways, but again, healthier than the majority of things. It's recently broken out to the upside. Now we're kind of pulling back. The 20 should keep working its way up above the 50. And, do higher rates hurt Verizon? Well, for now, they've got pricing power. People don't cancel their cell phones. They, regardless of whether you can afford a lot of other things, everyone wants their cell phone and they want to pay for their service. That's almost, that and food are almost a battle. Would you rather eat or would you rather have a cell phone? And people debate that. So pricing power there, and again, just a healthier name. And then if you want to get a little bit more on the aggressive side in energy, Oxy is a leveraged play on energy prices and has kind of been in this ascending triangle. We'll need to break out. Today we kind of, went up towards that. It's not a deal breaker yet, but on a breakout, it should have a big spike. And this is a short-term trade idea. Could last for a while, but at least a short-term kind of spike, and I think you could take a quicker profit. Twitter we highlighted last week as a sideways candidate, and it was around 45 when we did. Well, today we were around 45 again. We finished at 48, but basically have spent the last week here. It's not going to perfectly flatline like this over and over again, but we stick with it on the sideways ideas list because I don't think they're going private, and I don't think, buyers are kind of I think there would be buyers at lower prices and so on. So it's going to have a little bit of that choppiness to it and probably kind of stays around here. People are pricing in, the options market's pricing in a big move. They think, well, if Elon walks away, if this and so all of a sudden the options are priced for a massive move. And so far, it's just not happening. So week one, pretty good for that neutral trade. On the bearish list, I had these in last week, and they're about the best names that I can think of. You could already be short. I actually have a bearish trade that I entered into a day or a trading day ago on Friday. But ultimately, I think we break to the downside. So this inverse cup and handle, I think we're going to go down there and get a spike to the downside, at which point I'll probably be looking to take profits. Lows, very similar, had a bear rally. I'm not in lows, but it's just as good, maybe better, frankly, to the downside. They're bearish, they're trading poorly, all the characteristics we kind of look for bearish ideas. And then high flyer that has spent the last few months sideways. So this is DigitalOcean, and they're definitely in the tech space. I think they're more in kind of the cloud computing, all of that. But anyway, make a long story short, we're well rested after a big decline and seem poised to head back towards that support and quite possibly break that support. I've had Roku and Roblox and some of these others on the bearish list for a long time. I think in a way, a lot of these high growth stocks became a fad, and fads happen in the markets. There was a big fad for buying marijuana stocks, and they collapsed. And there was a big fad. There have been times where there were fads for all sorts of things, but Chinese tech was a fad that happened. There was the Sina and the Sohus. I remember that. There was a fad where people were going after Taser, the police, when that first came out. There were fads for the 3D printing stocks, the Triple D and Stratasys and so on. They're little fads that come about, and people say, oh, this is going to, change everything. And usually it's not maybe quite so great. And I think a lot of these tech stocks were a little bit of a fad. People got caught up in the euphoria of it, and it wasn't the place to be. So a little bit of a change in tone for one thing. The US dollar still rallying. Precious metals were up on the day, but look at the difference in price action. US dollar held its gains. Precious metals sold off and turned down. So they kind of left a gap up, but a red candle back down. Gold and silver and so on. Now, is that too much, making too much out of one day's price action? Probably. But I took profits on some precious metal trades. I might be too early. That's fine. The trade was fantastic. It worked. It ran higher. I mean, everything you could ask for in gold mining, silver mining, the metals themselves, and so on, taking some chips off the table. And I'd rather be like this, where it looked like on a gap higher, nice positive optimism. That's how often exhaustions work. It's kind of the punctuation mark at the end of this move. So I was locking in some gains, and I think precious metals may see a little bit more follow through to the downside. I think it's a take profit signal. Markets seem likely to remain sideways. Powell speaks on Thursday. Big week for earnings. You're going to have a lot of them. Freeport McMoran, Newmont Mining, I just mentioned gold, Netflix, and Schlumberger in the energy space, AT&T, Tesla, Union Pacific, Verizon, which we mentioned in the list. So be aware if one of the stocks you want to trade has an earnings report There's going to be, pricing where if you're trading the options market, you're going to pay if you're buying options for that earnings expectation, or if you're selling options, you'll be compensated for that additional risk and that additional volatility expected. But be aware of it. Check those earnings dates before taking any trades in any names right now, because we're right in the heart of earnings season. Have a great rest of your day, and we will see you next time. Goodbye, everyone.